this good structure? Are we bullish or bearish? Judging from this, actually starting from here all the way to this last place market is now. So let's even start from there. So are we bullish or bearish? Looking at this good structure.
For
me, I can say we are bearish.
Bearish, okay. Okay. The other person, are we bullish or bearish?
I'll still take bearish for this.
Okay, so I would like you to now, you guys now show me why you are bearish from this daily time frame perspective, this day time frame. So why you are bearish? So I would like you guys to show me the reason why you are bearish on this market.
Okay, for me,
Like for
the
me,
reason I'm bearish is because price broke this high that was made and created a lower high.
Okay,
Like
this
this
one.
low
I'm talking about this
higher low. Yeah.
higher low.
So
Higher low.
it broke this higher
Okay.
low and created a lower high. So for me,
So this is where you're talking about. Where do you mark your lower low from? Do you mark it from here or here? Where exactly do you mark it here? You want to mark your, you want to do your break of structure, marking out your structures on this particular here. So where do you mark out your structure from? Do you use the body of the candle here or use the wick?
sorry, okay, I use the body.
Okay, the body here, right? As break of structure, right?
Yes.
Okay. So is there anybody other person that use the body or the wick here?
for me, I use the week.
All right.
I
So
use
if
the week.
all right. So normally if you want to mark your structure, you use the wick, not the body. In order to
Okay.
avoid a lot of fakeuts. So if you are using the body, actually you tend to see a lot of noise. When you use the body, sometimes here, and for example, this price, just like the way it did here, spike here, at this very spike down here, we don't have a break of structure yet to the downside, or let's change of character to the downside. We are still technically bullish. It was until it now came back here again, this very last one. So they're now closed below it with little pips. So if I have to check the pips that this price used to close from here to here, this is about 300 pips. So that's about 400 pips anyway. So it's 390 something. So that's about 400 pips that this price used to close below it. So this was proper place we had the break of structure. So this very first one was never a break of structure. So just a week below. This second was a week below. It was until this body here gave us that body closed below this low that we had here, below this week that we have here. So to mark your break of structure, to count a market as break of structure or change of character, you actually need a body of a candle to close below the last week that price created. Whether if it was body that created last, it must close below the last body. And it must give you a body of a candle close below it, not just the wicks. So this week's here, this one is like a news or something like that. So all this one is still not break of change of character. So it's until when this guy came back the second time and closed below it, that was when we had a change of character at the downside. So that was how good, looking at good from this very structure here, that was that it became bearish. So guys, from this point. But from the overall trend, which is this down here, gold is still bullish from this overall trend because the last low that gold actually gave us, this was it has a high here, then gave us this low. Because this low that pushed all the way to this high, all the way to this high. So our break of structure as strength continuation was this. So the low that needs to be taken out for this price to change from a bullish structure to a bearish structure is this low. And as a matter of fact, as we sit down, we are still trading above this low. So structurally on the daily time frame, we are still bullish. So this is the external structure. So this is the external structure. But this one that is happening here is the internal structure. All right. So from the internal structure, we are bearish. But externally, we are bullish. So now what we have been, this dump we have been seeing golden of recent, all we have been trading is just the internal structure, which from internal structure, even what I traded today, we are still very, very bearish on gold from the internal structure. So now this low, this is now the new low from the internal structure that price gave us. This become the new high. So this low here, for this low to become a protected low, for this low to to turn to an unprotected low is until when price take it out. Then we say the price is still what? Continue falling. But at the moment, we are still trading below it. So that means this low here is still protected low. So it means I'm looking at this very high here. The high for the internal structure is this one. So the range which we are trading on gold now is from this low here all the way to this high. Let me just delete this back one. So the range at which we are trading now is from this high here all the way to this low. But looking at these structures on daytime, it might be confusing at like what exactly I want to trade next, because we don't actually looking at it on daytime frame, we might not actually be able to identify that where is this price going to. So that is what makes me to add something like a price action to it, so which makes it more clear. And that's where I put in what I call support and resistance, which are very, very important in the market. Now, if I draw this zone from here all the way forward here, all right, looking at this zone all the way forward here, so I will delete this line. So pardon me, let me change the color. Okay, so let me dim this color. Okay, so this is my resistance below here. This down here, my resistance. So I can clearly see that we had a first touch here. This was a touch. And when price approached it the second time, broke through it and retested that same place, which become a second touch. So, and for a resistance zone to stand as a resistance zone, we actually need to see 3 major touch on that trend line, on that zone. So which the third touch was this one, this very one. But if I have to expand this zone a little bit, we know that this zone touched it. But I only reduce it because I don't, if I'm going lower in time frame, this zone will be becoming more bigger. And I don't want it to be to get more bigger. So that's why I make it very tiny like this. So we had about 3 major touch on it, 1 here, 2 here, and 3 here. Now, how do you draw your support and resistance? Some people draw it wrongly, and that's why they say support and resistance does not work. It's just because the way they draw it. First, you want to make sure you are doing your support and resistance on the body of the candle, not the wicks. So if I delete this guy, you can see that it's sitting down on the body here. On the body of that candle, not the wicks. So this, we have the body of the candle here. You can see this body of the candle, this zone here, all this is the body of the candle. So it's only this one that didn't get to it very well, which is the wicks, so which I don't really care about. And we can actually see here too, we have the body of the candle sitting on it. So if you can draw your support and resistance sitting on the body of the candle, then you're going to see how many times price will actually come to that your zone and respect it. So that's how you draw support and resistance. So let me just delete this little. So that's how you draw your support and resistance. So if I have to clone these two, I'll put it up. We can actually see that this and that one here, and this very top. So, and which, if some of you watched my last video on YouTube, I was talking about this very zone that I'll be selling from here right when price was there. And I took a very nice sell about this point, and I think I closed somewhere here. So as of today again, as of yesterday, I was looking for a selling opportunity. Which that structure was clear on the 4H, but it's not clear yet. But somewhere around this region. I was expecting price to get there first, but price didn't get there. Instead, it dumped a little bit. But while price was dumping, I was actually watching it, seeing where price is going to. So we see where price is going to. Actually, I was in that sell for a short while. The moment you get to that area, and I know that, okay, this thing has reversed, that was when I just put the normal sell. Then I scalped the buy all the way to, I closed it off like 1 hour, about 2 hours ago. So when this rejection started. So if I go to the 4, what I actually do on the daily time frame here is I identify the direction of the market. So the higher time frame is like the Google map that show you exactly where price is moving to. So they are like Google Maps. So once I come to the higher time frame and I can point out major zones on the higher time frame, all I need to do next is I just go to the lower time frame, 4H, 1H, 30 minutes, and I start looking for my entry strategy and other parameters to actually take the trade. All right. So these are the major zones which I just plotted out. We have a major zone here, this is a major zone, and this is a major zone. So this is when price is down like this, is a support. When it's above it like this, resistance. So presently, price is reacting from this resistance coming down. So it's until when it comes above it, we test it, then it becomes support, then this one becomes new resistance. So that's why I just actually plot it. So as my major zone. So why on major zone as well, we also have something I call the minor zone. But most of the time I don't pull out the minor zone. So the minor zone are not as strong as the major zone. They are still very, very relevant in the market. But what I use those minor zone for is to actually catch some to catch some little retracement or to use that profit targets. That's what I use them for most of the time. So they are not as strong as the major zone, but they are also very, very effective. And I used to use the yellow colors to draw that. So I use the 10 triangle. So this is the kind of triangle I use as yellow color. So I just plot it out like this. But nowadays I don't plot it out. So because I can actually see where exactly it is. And because they are not much as relevant like that, that's why I don't really plot them out. So let me just plot this one. Okay, so these are I plot this minor zone back in the days. So this minor zone, all these ones, if I leave them in this market like this, years to come, price will always come and respect them, price will come, respect them, price will come, respect them. These ones, if I leave them. So far, but one thing about gold is once it leaves this present space it's doing now, and shoot tired, it might not even come back again. So, but one thing I now also do is this pullback price from here, I actually catch this trade, this buy from here all the way to this high, from this very bottom all the way to this high. And I was able to do that. I could see right from this point, I had this other block here. I just plotted this other block out like this. Like this. So when I plotted this other block, I didn't take a buy right from the other block because that's why I said you need confirmation to get in the trade. So I waited for confirmation, and the confirmation I waited for was I went to the 4H time frame. So on the 4H time frame, I was seeing the rejection. My market rejects all the way to this point. But you see, this is the shooting star. So if you understand candlestick pattern very well, very, very well, you actually know how to use them to maneuver your trade. So this is the clear shooting star. Shooting star is the single candlestick pattern that anytime you form, you don't need any other confirmation to tell you that that this price is about to reverse. So you could see how it shoots all the way from this bottom here. The moment it closed that day, the next day, a bullish engulfing followed it. So here, this body of this candle here to the weak body here become my interested area to get in the trade. So I just plot out the other block like this, and immediately price shoot back to it. I get the buy. I was holding that buy all the way till it reached this very high. This is my major zone here because I know price actually back coming back here. I hold the buy. So anytime it goes like this, pull back, I just wait for the next green candle to form after that pullback. Then I had position again, then continue taking like that. And I used to teach my students about this very particular candle, this type of candlestick formation, this kind of candlestick pattern. And you guys will even be seeing it on the chart very well. I use it a lot, this kind of candlestick pattern. It's one of the very effective candlestick pattern in this 2026. It's work like magic. So what, like for example, now this one formed, push down, and this one follow. And this one was not able to engulf to this place. So what I'll just use this body here, wait for price to come back there, add more position again. So at this very first green, I added a position. When price went higher again, came back to it again, added a position. That was how I was able to have about 5 positions before price eventually gets to this very place I took my target. And how I was able to do it because I know that price was reacting from the key level from the daily time frame. And price moved from zone to zone. Price will not stop in the middle of a chart and just start reversing. Price moved from zone to zone, zone to zone. So this was a major key level. And I know that the next one that price is going to approach was this. So which I took it all the way to this very high. And just watching for a few days and what price did. So that's actually how I trade. Now, for today's trade, how I was able to take today's trade, you actually see that scalping buy I took. So I was able to take this trade was very simple. The zone which I was expecting price to put to before selling was, let me take this back to 3 hours. I think it's clear on 3 hours. Okay, yes. You can see this other block here, this very one. You actually see the charts you see the charts. I send it to the group. This was where I was facing price to when we were somewhere here. No, I think here. I was facing this pullback here before I start looking for selling opportunity. But instead, price stopped at this minor resistance. That's why I tell you that minor resistance, they are not as strong as major ones, but they are also very, very effective. So the moment I saw price stopped at this area, at that time I didn't plot this zone out, but I've been able to train myself. I actually know where each zone is on any chart I'm trading, even without plotting them out. So I knew that this reaction, this engulfing that follow after this one, is actually going to trigger a sell. Now the sell where it's going to, I don't know, and I don't even want to know, but I know it's going to trigger a sell. So what I did there was after this guy put down here, I just marked the same other block like this. Here, very one like this. And when price pulled back into it, I took a sell. So my first level target was to back to this other block we had here, where the body of this guy and the body of this guy, this was the close of this one, this was the open of this one. So this is the base. So right, this was the base. This was where I was actually targeting as my first level targets. But why targeting this base on this is 3H time frame? Why targeting this base on the 3H time frame? I also was very careful. I just brought out my Fibonacci. Like, okay, looking at this price here, this place we had here is internal structure to this major structure we had here, because the major structure is still from this high all the way to this low. So all these one we are still seeing here, they are internal structures. So that's why you need to identify your internal structure and external structure too as well. So looking at this, all this one is just internal structure. So the external one is this one. This was the last high we had before we started seeing this dump. And the kind of strong zone which price is actually reacting from now as a pullback is going to be this one. So you're going to count this as an external structure. So price actually took out the last internal structure that was there, which was this, giving us a change of character. So the moment I saw the change of character, now this is internal structure, won't be as strong as an external structure, but I actually know I trade around them. I actually know I maneuver my trade around them. So the moment I saw this as a break here, and this is where market is reacting, coming down. So this market might now decide wants to dump more. That's why I always have like 2 TP targets, whatever. So what I did next was I just put in my Fibonacci from all the way to this very low that my price is react from this place that price is reacting here to this very place that is actually reacting, turning from showing structure bearish structure. So I just put it like this. This is how I did it. And I could clearly see that this place, that price, immediately price dumped here. So it was on the lower time frame. I was on 15 time frame. There was an engulfing candle that followed all the way to this point. I just closed out all my sell trade. Boom. Because I know that price is actually going to react from there, because this is Fibonacci golden zone. The Fibonacci golden zone is in between 5 points, 50% retracement and 61% retracement. So I use 0.5 for 50% retracement. I use 0.618 for 61.8% retracement. So in between these zones, that was like Fibonacci golden zone. And that was where price actually reacted from. And the moment I saw price forming that reaction, so I was actually looking for, because I know that price is not going to reverse without giving you a structure, without giving you a pattern. It should actually give you a pattern before it goes. So I was actually looking for that, which pattern is price giving that I can actually follow. If there's no any pattern there, I'll not close myself. But if I could see any pattern on myself, I'm out. So I was now switching from time frame to time frame. So I went to 1 hour time frame. I wasn't able to identify any structure there. It goes to 30 minutes time frame. There was no any structure there. That was why you need to be very time frame independent. You need to know how to use time frame that it won't convince your buyers or anything. That it's fast. You're going to be fair. So when I get 30 minutes time frame, I didn't see any structure. I was like, where is this guy reacting from exactly? So I went to 15 minutes time frame. As at that time, there was no any structure. So the last time frame, which I did get to, that's my bus stop. Once I didn't see any structure there, then I would just put my hand and be looking at the market, which is the 5 minutes time frame. And on the 5 minutes time frame, I could clearly see that. Okay, let me just type 5 minutes time frame. So on the 5 minutes time frame, which is this here, I could clearly see that there was a fucking inverse head and shoulder for me here. And as at the time when I get to this 5 minutes time frame, it was this engulfing candle that was the last candle that formed when I get to 5 minutes time frame. So what I just did that, okay, I was like, okay, this is an inverse head and shoulder. So I just put a straight line here, which is my neckline region. So all I need to do on this neckline region is I need to see price retest it. And if price retest it, I'm going to buy from there. So immediately price closed above it like this. This one, immediately it's open here. First went up, then now came back there. The moment I saw that it's closed like this, I know that that was the retest. Nobody needs to tell me. That was when I just added like 6 positions, not thinking twice. And I just put my stop loss in this line, this somewhere here. This where the shoulders are. The left shoulder, the right shoulder, the head. So this was where I put my stop loss, this base here. I just put my stop loss there. And right from there, price was just shooting. So while price was shooting, it gets to this very high. It gets to this very high, and this pullback happened. But I knew that this pullback is not enough to reverse the market because this is a continuation of that block. So there's a video on this on continuation. I've talked about this continuation of that block on my YouTube channel. You can go and watch the video. I may not be able to explain it very well here. So this is a continuation of that block. I know that all price want to do is come back to this continuation of that block. As at that time, the London section was about closing. And I was telling one of my guys that the highest thing that I'm seeing that will happen here is New York is going to come. They are going to push price into this zone and they'll start buying from there. So now the reason why they want to push price into this zone is they know that a lot of people trade engulfings like this, they will have entered buy. So when they now see strong engulfing like this, another one follow, they'll panic and close their trade. All right. So they have to, or some people start selling from there. So those people that are selling, they will now use their money as what to, as liquidity. So take more buys and continue with the buy. Because London sector was already buying. So New York is not just going to come in like that and just continue buying like that. They have to do some of a manipulation, which I know that the highest thing they want to do is here, put this price here. And I told him that anything that makes price come below here, I'll close on my trade. I'm out. And immediately price came here. The next thing I just, after this price tapped into this zone, the next was involvement. I knew that, yes, that's it. And it was like, wow. And he said it too. I said, no, it's not today I'll be studying patterns on gold. And our first level target was actually this our 100% retracement here, this high. So I told him that this high here, if price could be able to break above it and continue shooting higher, we could get to this extension here, which is actually in line with the place I was interested in selling in the first place. So you can see this is the black line I put there on the right time frame. So you can see this Fibonacci extension is in line with it. And I told him that if price now fail to close above it, and then we just close our trade. So that was when I saw this dump here. I was like, still normal pullback. Then price was going up again. The moment I saw that it's coming back again, so I just closed the trade somewhere around here because I know that was the bus stop. I just be seeing sell because all this reaction here is still happening on the minus zone, which I plotted on the daily time frame, which I show you guys. So you can see this is the minus zone. And I told you that what I use minus zone for is to actually take profits. So what that's majorly things I use them for my minus zone. Once I see them, even if my TP is very far, but once I can see the minus zone, I'm like, this minus zone can actually make this market reverse. So I'll just start closing my position from there. Or at first I set BE plus. So BE plus is like, let's say you're going for a risk reward of 1 to 8, then you now put it on the risk reward of 1 to 5 or 1 to 4. So you have at least you've locked in some profit. Even if the market wants to come and reverse, you still come out with money. It's better than a break-even trade and it's better than a losing trade. So this is actually how I personally trade market structure. So I'm not the kind of trader that follow the SMC break of structure. I don't follow it fully. I have my own way I've mixed it. So I've been able to identify some pattern and know that once I see them, they work. I don't want to know the structure that is given at that particular time. But once that pattern form, for example, we are bullish now. For example, we actually know that this market is bearish here. The moment I saw this pattern, I know Ivan said I'm sure that don't form like they play. Like some of them actually sometimes they fail. But like 90% of the time, if you see an head and shoulder pattern or Ivan head and shoulder, that is the only pattern that does not joke. It will actually play out. Like 90% of the time it's going to play out. So I just like Ivan head and shoulder pattern is for me, yes. So I was telling that my guy, I said, yes, exactly. Oh my boy, like I could scalp. It's been a long time I scalp. Like I could scalp today. Because this was what I saw, and it's actually happening on my Fibonacci golden zone. So first, I have an inverse and shoulder forming inside of Fibonacci golden zone. That's like 2 key points for me. And not just that, on the one day time frame, let me go to the 1 day time frame. I also had it reversing from a very valid other block. Though it didn't come to touch the other block very well, but the other block was very close there, so you can see it. So the other block was inside the OTE zone. But for the fact that this great price wants to react to, I know that this this place price just you let it there for future use. So later it might come back there, which this guy might not interested to come back there and continue selling, dumping, or just come back there, tap into it. Then now it decide to now go back to this particular high here. So this is actually how I trade this is how I look at the markets. So anytime I'm going to markets, no matter the buyers I'm having, once I stay short, I delete all those buyers. Then I focus on the buyers that the market itself is showing me. So hope you guys get the points, the explanation. So are you guys with me? Hope you guys get me.
With you.
So do you guys have any questions? So I'm about to rounding up now.
Okay, my question is like, how do you mark up your supply and resistance zones, and just your supply and resistance zones?
Supply and resistance, okay. So how I mark out my supply and resistance zone, most of the time I do that on 4-ish time frame, no matter if I'm trading. So I always focus on supply and resistance on 4-ish time frame. So supply and resistance, I actually mark them out is first. Always like to pull my chart like a line chart like this. Looks very tiny. I see most of my screenshots I was saying. It's now that I'm not making it bold. Before I would just use this. You hardly see the numbers. You hardly see these numbers of this PS. So once I make like a line chart like this, all right. So my supply zone, which if I want to mark out the supply zone, for example, here now, this place here is my supply zone.
Yeah.
This is supply zone. So the reason why I mark that place as supply zone is any place that you see price consolidate for a long time before leaving that place. Okay. So as I was explaining supply and supply zone before. So let me go back to 4-ish time frame. So that's where I should draw my supply. So like I said, here's my supply zone. All right. So what I should do is anywhere I see price having a lot of consolidation, then before actually moving in the right direction. So that was my supply zone. So like if price later come back to that area, price actually going to hold there. Now, if I'm to mark actually draw out the whole of this supply very well, it has to be from actually where we are this one here to all the way to this bottom. All the way to this bottom. And you can actually see when an engulfing closed outside of it, we actually tested it before dropping. But most time personally, I don't actually trade supply and resistance. Supply and demand. Sorry, I mean supply and demand. I don't really trade supply and demand because most of the time there's always a pattern that formed even before that supply or demand happening in that area. There's always a pattern that will have formed. So most of the time, what I just look for is chart pattern that is in that area. That's what I look for. If I can spot this chart pattern, that's what I'll go for. So now, for example, now, like what I'm saying, looking at this very area here, you could actually see that there's a chart pattern here. We have a left shoulder here, a right shoulder, and we have a left shoulder here, the head and the right shoulder. So this is an head and shoulder pattern. So this head and shoulder pattern now happening on a key level, which I actually plotted from the daily time frame. So you can see the daily time frame. Actually, this very chart here, I actually took a sell here. If you guys, I actually dropped the post in the group. I used to drop a lot of them in the group. I actually took a sell here. My stop loss was just above this place a little bit like this. The moment I saw this candle rejected inside, so when this sell candle was about to open, I took a sell from there. And my target was all the way to this down here because I know price is going to sell. So I was just targeting, I think it was a reach of 1 to something. I was targeting this low here. Yeah. That was a reach of 1 to 6 point something. So I was targeting these weeks here. Because I know that price is going to sell for a fact. So this post are in my group, so you can check it in the group. But price was, I was in profit too. The price was going. Then I think Trump's speech or something, I can't remember. Trump's speech or something just came, wiped it out, stop loss. Because this kind of trade, I can't break even this out because this trade is not even up to 1 to 2 yet. It's not up to 1 to 3. For any trade I'm taking, before I can break even any trade, it has to have moved 3 times of my reward. 3 times of my risks, that's 1 to ratio 3 of my risks. That's when I break even. So without it moving 1 ratio 3, I don't break even. So this trade, my stop loss just is the normal place it's meant to be. This guy just came, took me out. But when immediately it took me out, that's why you have to know what you are looking. You have to understand exactly what you are looking for in the market. This thing is the major zone now. Why did price take have to come here? What did they come and do here? So I think that's Friday closed. So I was looking at and now we analyze or whether it's me that not plot very well. Maybe I'm sleeping when I'm plotting this. I plotted everything. Like this thing is perfect now. What now happened? Then the following week came again. Now price dropped. So I was like, okay, so what you guys want to do here is actually want to put in and head and shoulder pattern because the moment I saw price drop and I could see that this is the left shoulder, like, okay, now they'll come for the right shoulder. Once the right shoulder come, then price is about dropping. I'll wait for the retest of the neckline, then I'll get in. So that's why I don't actually trade supply on this thing. So what I'll just do is I'll just put a straight line on the neckline like this. That's why I used to get in my trade. Just put a straight line on the neckline like this. So if price weaks into it and rejects, I enter straight. If price just come with an engulfing candle, just continue going, I won't enter. But if it get there and reject and close like that, that's when I used to get in. So the moment this price gets here, rejected, I saw from there. I sent this chart to the group. You can see them in the group. In fact, I even do the video even before I took the sell, I was explaining the video on YouTube here. So I took a sell, my stop loss was just around that area to as well. I think I even reduced my stop loss here because I had the confirmation already. So I was just targeting that same low. And this was the same low I was targeting. So I actually left this one to there. So I just did date of recent. So this was this sell that I took the TP on Thursday. So this was a risk of 1 to 5. Then I added another position somewhere here. So the second position which I had was just a reaction from this tiny other block that we have here. So price tap into rejected from there. I added another position. Now I now transfer my stop loss of this one to the stop loss of the new one I entered. So that was how I had two positions and I was able to make back what I lost from here. So, and the reason that this happened is because I actually know what I'm looking for. I don't care if I'm selling and price just took me out. But so far, that structure is still there. It's not changing. That structure is still showing. That structure have not changed. I'll still look for enchantmental again. Because so that was what I used to do. And the second one, which word was even more higher than the first one. The second one I took about 6.5. The first one was 5 ratio, 5 RR. So that was how I was able to take down. So naturally, I don't use demand, supply and demand. I don't really use it. I don't really trade supply and demand. All I trade is candlestick pattern. That's my major thing, candlestick pattern. Then with the key zone, then with the Fibonacci. So once my candlestick pattern is confirming to me that price is deviating from a zone, I have my Fibonacci confirming that too as well. Then I have a chart pattern forming in that zone, either candlestick pattern or chart pattern. Once I can see one of them forming in that zone, so I already have about 3 things coming together, pointing to me that yes, we're about to go. That's how I used to enter my trade. For example, now this is already a dead hour. I don't mean this is not a dead hour, like it's still an very active hour. After this guy came down here, after this guy came down here, this guy start forming. If I go to the lower side, because this for H, if I go to 30 meter time, there will have been a confirmation there that price wants to sell. So I will have sell again. But anytime I'm in a trade, anytime I'm looking for a trading opportunity and it's already getting to for something in the evening, I don't trade again because that's my own dead hour. So I don't trade again. I just wait for the next day section. Then I look for opportunity again. Anywhere price like move to, it should always give a pullback, a confirmation, then I get in again. So you guys hope you understand that. So you guys with me.
Yeah, I'm still with you.
So hope you understand that. So but actually going to plot out your supply and this thing. That's how you plot it out. Plot it out here. Let's price move first and back into it yourself. So for your demand to outgo, you just use the same formula. So for example, I can't see any demand here to buy from. I can't see any demand. But I can't actually see any demand here. So I think gold does not really print all the supply and demand. Gold does not really print it. But we might actually see it on another chart confirmation. So any other questions? Anybody have any other question?
Can you drop the recorded version after the meeting, please?
Yes, I'll drop the recorded version, sure.
All right, thank you very much.
All right. So any other question? So let me, in absence of no question, so there's no other question. Let me analyze one more chart. So not being a good chart alone. So any other, just mention any chart. So let me analyze it.
UJ.
UJ, okay. So this UJ, this pair, actually, if I think I dropped a chart, let me talk about this page first. So I think I dropped a chart in the group where I talked about if we can see can price closing above this for that day, at least we have a close to somewhere here. Then I'll wait for a pullback into the zone, then I'll continue buying. But immediately I drop this thing, I think before the next morning, before daytime, I think I drop it in the night. So before daytime, I don't know what they did to Japan low. I just saw this red candle. The whole JPY, all of them straight red. So that was a straight red. So like, for example, now, if actually kind of trading this one here, I don't used to call this one the break of structure. Do you know there's a break of structure at continuation? The way it's closed here. That was what I was saying that we need to see a little push up. The reason why I don't see this as a break of structure, sometimes I just call this one shift. So I have this kind of, I'll just call it last swing, so shift. So it's always like, if the body does not really close, like clear above it. If, like, for example, the wicks have come there, rejected, then at the end of the day, we now have a body close a little bit like this, I'll accept it. But there was no wick closing, and after this was the first one I closed, then the next one was like a crazy candle dump. So this kind of thing is not a reconstruction, it's not a continuation buy. But actually, you know that this one was based due to a news or something trigger or anything. So, but presently, if I now analyze this JPY here, so first I'm going to go back to let's start from the weekly time frame on this one. So I'm going to put everything on the charts. So from the weekly time frame here, so actually, this dump that we had here, I would have said it's actually he accessed from a very valid zone. The reason being that this is this kind of chart pattern, I used to drop it a lot in the group. So let me zoom out and show you guys. So let me cover this. So this chart pattern, I drop it a lot in the group. So this is an evening star candlestick pattern. All right. So just like I show you this one too as well on gold when I was analyzing gold. So this is an evening star candlestick pattern. So this dump that's whatever cost it, the news or whatever that we had here, this one was actually was a confirmation of the action from here. So though we've come into it first time, dump, trying to get back inside. So that was why I was saying that if we actually have a body closing very well inside of it, then the buy might continue. All right. But I don't know the news that came up that day. Rejected. So this chart pattern still confirm that it's a chart pattern you don't joke with. It's a candlestick pattern you don't joke with. The morning star and the evening star. So the morning star is for the one that you used to sell. That's you're going to see a bullish candle first. That's the candle in the original direction of the trend. Then you are going to see an indecision candle. Now, how you actually trade this pattern. Let me move this guy aside now. How you trade this pattern is very, very simple to trade. First, you must see the first candle that's closed, the first candle that come after this bullish that's in the original direction, sweep above it and close back inside of it, or giving you a dodgy candle like a cross dodgy like this. A cross dodgy like this. So this is your cross dodgy candle. This is your cross dodgy candle. For giving you a cross dodgy like this. So if you can have, regardless of the color, even though if this one is blue, the color does not matter. So far it has swept above it, then give you this kind of candlestick or a cross dodgy like this. It signaling that price wants to reverse from there. So looking at this kind of candle on its own, you can actually trade this candle without extra confirmation. So personally, this candle now, price, this is the liquidity here, which price has swept here, right? So, and it's closed here. So the minute it closed, the next candle open, you can actually take a sell right from there this very candle, you can take a sell right from here and pull your stop loss. This is actually what they call CLT, this thing. So sometimes on the lower time frame, you even see structure changing confirmation to trade it. And where you want to target is this one, this low here. This is low. So this is another liquidity extension. So once price gets here, you can take your trade TP. So, but this is the issue of 1.6. That's because it's on the weekly time frame. This thing that I'm seeing on the weekly time frame there, if I mark this thing, the moment it forms like this, and I go to the 1H time frame, I'm going to have a very sweet one ratio hit on this trade, because I'll just wait for a structural confirmation on the 1H time frame, like from the bullish to bearish. Once I see that, so my stop loss will reduce, then I can take it. So this candlestick pattern are tradable on their own, but at the same time, while they are tradable on their own, they also price also used to come back to it in the future as a key level, using that as a key level, as a major zone. That's why I traded a lot. It's one of the best candles that work very well. So you can see in the future year too as well, price came back into it and still rejected from it. All right. So now if I'm to now analyze this guy from this present market structure we had here, so we could see that here, I'll use this present market structure. We could see that here we are actually in an uptrend from this structure here, on an uptrend, because this is weekly time frame. This structure takes months before they form. So this is bullish. Looking at this structure, because the last break of structure, which is very clear we had, was this. So this was our last break of structure. So saying on USJPY, we are bullish. So because we actually closed above it very, very well. So now, if you are bullish, the way you want to get in for more buys on the higher time frame like this is, after you see a break of structure to the upside like this on the higher time frame, you need to see price pull back into of these two zones, which I'm going to mention, either the Fibonacci golden zone or the Fibonacci OT zone. If price does not pull back into any of these two, I will never look for a buying opportunity when it comes to the weekly time frame structure perspective. All right. So, and you can see these are a lot of weeks. So what I just think that what price did here was just to come and take out all this liquidity here and actually pull back into the Fibonacci, either the golden zone or OT zone. So now let's draw that together out. So the low which I'm going to use is this one, because you can see after you have this break of structure here, price came down here. So I'm going to use this one. Because this one is lower than this. So I'm going to use this. And the high which I need to use is this new one here. So I'm going to draw my Fibonacci all the way from this low all the way to this high. So if you look at this market very well, where are we reacting from? The golden zone, inside the Fibonacci golden zone. So Fibonacci is one of the very crucial tools you don't even joke with. So Fibonacci, this price is reacting inside of this zone. So let's say if I actually say I'm with the lower time frame and I see a sell opportunity here, the way I'll be targeting is inside of this zone. Once price jump into it, I'll close my trade, I'm off. So now I have my first confirmation that this reaction we actually see here was from this very beautiful pattern we had here. So now this very beautiful pattern, there's a way I explain to my students how they trade it. It has about two types. Well, that one is for my private students, so I'm not going to expose the secrets for this one here. It has like two types way of looking at it. But this candlestick pattern here has two different types. So if the first type form, there's a way we trade it. If the second type form, there's a way we actually trade it too. So, but the message here is price actually drawn from here, entered here. So from this one here, enter here, this is Fibonacci golden zone. So right from this golden zone, I'm not going to be looking for selling opportunity again. Instead, what I'm waiting for is structural confirmation. Then I'll continue buying. So that's for USDJPY. So that's on the weekly time frame. Now, if I now go to the daily time frame, so now that's where you now start looking for your order block. Because some people doesn't even know the importance of time frame. On the higher time frame, like the weekly time frame, you don't look for that block. All you need to do is identify your key levels. Even to daily time frame, sometimes I don't even look for that block. I try to identify my key level, the real market structure. So the market structure from the high time frame here is what is bullish from the weekly time frame, and from the daily time frame to it's still bullish. So looking at this, it's still very, very bullish. So you can see this was the last obvious low we could see after we had this massive rally here and price pullback. Now, if I use my Fibonacci, the power of Fibonacci. So this is the low. Okay, let me use this because this is the obvious thing, because this one breaks structure here. And this, after this structure was broken, this was the low that broke the structure. So I'm going to use this. And the high that it pushed to last was this one. So I'm going to extend it like this. Now, if you look at these markets, where do we come into? Fibonacci golden zone. So that's why, personally, I don't joke with Fibonacci golden zone. So it is when I see confirmation on Fibonacci golden zone and other zone like that, and I start looking for other confirmation. So you can see that this Fibonacci golden zone here, this move from this, let me string this chart. This move from this bottom all the way to this high, pull back into Fibonacci golden zone, and what? Buy from there. When you are buying, where you need to take your profits, your first level target is always the 100% retracement. This is the 100%. Make sure you always, even if you are going for this extension, always take profit at the 100% retracement, which is this one. So you are taking some profits. So let's say you are using one lot, at least lock in 0.5 out of the one lot, leave the remaining 0.5 on break even or BE plus, like move it to maybe 1 to 3 of your risk, 1 to 4, depending on your risk appetite. All right. So this Fibonacci actually here give us confirmation. So that one I was doing this job. We delete this. So I'm going to delete this Fibonacci because I was doing his own job. So now the new Fibonacci, which is playing right now, is now this one. You can see this rejection from this very valid zone. And I also stated that from the daily time frame, you can start looking for your order block as well. So if I'm to look for order block from this one as well, this is my order block here. And all this rejection is still happening inside of the order block. Now, one thing you have to understand with the higher time frame is you don't trade a pending order using the higher time frame. You want to wait for price to be hacked from your higher time frame structure to give you daily time lower time frame change of trend before you now continue with the trend. So you can see this reaction from here. So you can actually see that it's even stretched the other block a little bit, but did not close below it. So that means the other block is very valid. It went above it. So now daily structure has given me that I might likely be seeing more buys. All right. And Fibonacci is also aligning. Fibonacci is also aligning very well. And if I have to check, is there any other thing that is aligning? If I use trend line, let me see, is there any trend line playing there? Okay. So we had a trend line playing here. Now, there's a way you also draw your trend line. I think I have some videos where I've talked about how to draw your trend line with this zone on my YouTube channel a long time. So there's different way you draw everything. When you want to draw your trend line now, for example, drawing your trend line, you draw your trend line on the wicks of the candle, not the body. If you are drawing your major zone, you draw it on the body. If you are drawing your minor zone, you draw it on the body. But if you are drawing your trend line, you draw it on the wicks, not the body. Now, you only need to, on trend line, you only need to connect two obvious points together and extend it. Anything like price, maybe they do for future. It's none of your own business again, because price always come and respect it. So the major two, like I connected here now, is this very first one and this very second one. You can see that I draw it on the wicks of this guy, as well on the wicks of this guy. So let me highlight it out so you get what I'm saying. So you can see on the wicks of that guy, as well on the wicks of this guy. So once you can connect your two obvious points like this together, so extend it to the front, price will always come and respect it. So you see this one now, come there, it's come down a little bit, but still go above it. This one sat down on it profitably, comfortably, reverse from there. And this was where we draw our Fibonacci from previously. And one thing about this trend line to as well, how you trade it is always use the Fibonacci to as well. Now, this is the swing here. This is the swing. Now, if I put Fibonacci from this swing here all the way to this swing guy, let's extend it. Let's what happened. Where the price come into Fibonacci golden zone period, and price what rejected from there. And how that trade using the Fibonacci golden zone is once I see price closed back above this 50% retracement, once I can see price close back above it, that's when I take my buy and put my stop loss on where based on the structure that is giving me, put my stop loss, then I'll just leave it and continue rolling. And you can see, for example, in this one case now, after it's almost to 100% retracement, it came back, right, to entry, and what still went and what break it, 100% retracement, first level target, it, then went to second level target, it. So that's how you actually use Fibonacci, and you can see how it's so much in line with your trend line as well. And if as well too, I want to draw out a minor zone from this chart. So now, like I said, if I want to draw my minor zone, I like to turn the chart to a line chart. So there's this area here, which price is actually the minor zone. How did I know? I've changed my height to that extent where I can see minor zone and identify my minor zone and major zone. So this place here, this is the body, this is the body, this is the body, this is the body. So now let me just use like this straight line, then expand it. So, okay. Then I'm going to adjust it a little bit. So now look at our price down. It's here. Break it, tested it, went up. break it, we started it, messed up with it here, but it came back and tested, it went up. Here it came, broke it, messed up with it. That's why I say minor zone, price is always messing up with it sometimes. That's why they are not as strong as the major zone, but they are also very, very valid. So you can see, messed up with it, went up, came back, flat down on it, messed up with it. So looking from this point, all the whole reaction we had here was just on the minor zone that was doing the magic. All this whole reaction we had here on the minor zone that was doing the magic. For this, when price first came here, I won't buy. Do you know the reason why? One, though it's inside of the Fibonacci golden zone, one, which is very right. But looking at it structurally, this pullback, this week here, this break here, this pullback is not enough for this kind of move. So I won't buy. And two, at least I need three points to come together, three views to come together for me to identify that, okay, yes, I'm confused to take this trade on this very particular zone. So now the only one that is coming together here is just this one. In fact, the trend line, this is just one trend line, these two. So there's no trend line, these two, there's no trend line playing here at the moment across this place. So the only one that is only playing out is this my minor support, which become resistance after break price broke it. So which is one. And the second one, which is also in line, is the Fibonacci. But this Fibonacci will not be in line because at that time this price has not formed. So the holy eye I'll be seeing at that very particular time is going to be this one here, this one. So I'm going to put it on that one, this one. And the price come inside the Fibonacci golden zone? No. And anything that makes price still trading above the golden zone, I don't trade. I don't take entry because I know that that's like an engineer liquidity. So all this trade here is still above it, so I won't even bother getting in this trade. So the only thing that is telling me that price wants to buy is just this my minor zone, which I tell you that I don't trade off the minor zone. I just use them as a guide tools, as a guideline while in a trade. I use them as profit targets or to get extra confirmation if I need to go out or all the stuff of the thing. So until when Fibonacci now gets to this and pull back to this place, I cannot put my Fibonacci like this and say, let me see what's happening there. Now we are inside of the Fibonacci golden zone. That's 2 points coming together. But I still need one extra point, one extra confirmation. Because I need 3 confirmation. Before I take any trade, I need 3 confirmation. And which is the last one was this trend line. Price came into it. Very nice. And after coming into it, the last one is my candlestick. That is the killer. That's the one I used to get in every trade I take. And which after one was we closed above it. And I take my buy. And just like I said, this candlestick pattern is a very powerful candlestick pattern, just like I said. And I said I've even talked about I traded with now students. So like this same candlestick pattern here. Price came back inside of it again. Though we are back to NTO, but this point, I will still have another position again. Because I know that this one we're going to hold no matter what. So all confirmation have aligned. Then if I now take L0, fine. Market has done its own part. But my own part is I'm actually trading the direction of the market. I see coming to it again. I will add another position right from this point again because it's still in line with the Fibonacci. Now my morning star on this is going to be a evening, this is going to be an evening star. Evening star is for buy. So this is going to be an evening star. My evening star is not in line, then I take the buy. So that's how I actually trade. So presently looking at USJPY structure, we are typically very bullish. So you can see price is reacting from this very trend line here. So you can see it's sitting down on the trend line, sitting down on it, and we are rejecting from it. You could see that. Let me zoom out this thing now. Let me put this trend line very well. Let me adjust it a little bit. Okay. Now, looking at this trend line now, you see that dump that we had didn't touch it. Then price went up a little bit, came back to it today to touch it very well, and also very in line with this other block. Now, I had about 2 confirmations telling me that price might be buying this like next week. Now, this is now a next week price action. That price might be buying. Now, I have my Fibonacci 1 confirming to me. I have trend line confirming to me. Now, I had the other block. But the problem I had here now is weekend already. And when it's weekend, I don't trade. And Monday markets, I don't actually trade on Monday again because most of the time, Monday we just give you the confirmation of the week. And then that confirmation of the week will happen on Tuesday, Wednesday, Thursday. Then Friday, most of the time, we give you the reversal of the week. So you guys understand. But structurally looking at this structure, we are bullish on USJPY. This structure is bullish. At the moment, looking at it, following price action and innovating, this structure is bullish. So any other question?
Can you talk about liquidity?
Okay, liquidity. I think I already talked about one, the way I said the general liquidity is like, for example, when price, let me talk about this here now. This bunch of consolidation we had here, all right? This daily time frame, let me go for our time frame to explain this. I hope I see the chart on time. Okay, is it here? So now on 4H time frame, which we had here. So now what happened here is market makers, they already know that they're in the zone that they want to look for buy at this very area here. All right. And they know that everybody highs will be on this zone. But for them to confirm that, for them to not take the buy, because they will not take buy when you want to take the buy. They actually need to make enough money. So what they do is, on the normal norms, as an SMC trader, they know where you place support, they know everything. They know where you enter the trade. This is another block here. So let me put out this other block. So as an SMC trader, all right, they will know that you will say this is a liquidity, right? Now this an inducement liquidity, this is an inducement liquidity, because it didn't come into the zone. And this guy now came into it. So as an SMC trader, if you take a buy from here, right from here, and you put your stop loss here, because your stop loss is meant to go below that low. Let me do this Fibonacci so that it will be clear. Okay, just let me delete this guy too. Okay, so your stop loss is go below that low. So this is your entry, your stop loss here. Now, some people that don't actually know how to draw out other block, they will cover their other block right from this place, somewhere here. All right. And what will now tend to happen is when price came here like this, didn't come inside this place, move up, came again, didn't come inside it, now start going. They saw this engulfing candle. They will not panic. They will not say, this is another new other block that printed here. That's how liquidity work. So they say this is the new other block that formed here, very this place, and they will enter right from here, putting their surplus below this place. And what is going to happen? Price just move a little bit, took them out. So that's one. That's a liquidity trap there. That one is liquidity trap. But you see this one that we had here, 1, 2. This one is engineer liquidity. And now why they were building this one up was because they actually knew that you're actually going to take a buy from here. All right, take a buy from this zone. Which price came into it? On the normal norms, if not that you are not greedy, your TP target should always be the obvious eye, the last eye you can see. That last eye should be your first level target. You cannot have your second level target or that high, but that first eye that's close to where you enter should be your first level target. So in this scenario here, this should be your first level target. So, but because of greediness, this is your first level target, and you are up with about this word of 1 to 4 already. But because of greediness, all right, because of greediness, you will not target this space. As price reach here or it does not reach, set and forget. Whereas people doing set and forget, they only go for this word of 1 to 2. But you are going for this word of 1 to 8, 1 to 10, you are doing set and forget. So at this very point here, they understand something that this is the place will be high, which is normal for price to approach this space. Very, very 100% normal. They know. But when you are trading, they already created some form of an inducement here. And they've moved here, they now dump again to give your own entry. One thing that is telling you that this area here, they can come back here again, grab liquidity off it. Now come back, take all the whole of this low, grab liquidity off this same low here. Create how would I call it? They will not create where there is no valid POI. That's where you see price reversing from some unvalid POI. They will not create a zone there and start reversing from there. For example, they can use another block that was supposed to be served for sale that did not hold. They will not come back to that same zone and use it as a buy opportunity. For example, now look at this other block here. Was to hold for sale when price came here, but no hold. Price came above it, tested it. They can still use the same other block. If I send this other block to the front, you can still use it. You can see it. They can still come back to use that same other block as what? As continuation. So when it comes to liquidity, you're not taking partial profit, especially when you get to the first high you could see, or when you see a ranging market, because to be very clear here, all we had here was a ranging market, even right from here all the way to this front here. It was a ranging market. What they only did here is they manipulated to the upside, came back inside of the range for a while again, then swept the whole low of that range. This is how liquidity works. They sweep the whole low of that range just to fulfill their own order, After they swept the whole range of that low, came into a value zone, then continued buying. That was what happened to that gold trade that I took sell, which I will show you guys. I took loss. I took an SL. Even that one did not even give me a better reward, but I took an SL there. But I knew that what they did there was a manipulation because I knew the structure was bearish. So I knew for a fact that all they did there was they did the manipulation. So all they did there is they just take liquidity. They use me as liquidity. Then they now give a confirmation for the real sell. So which same thing is going to happen here. So if you don't take your profit at this area and still target this area, they will now come back, use your liquidity, tapped into their interested zone and was continue buying. But even when price wants to go again, like I said, price will always give you a confirmation, even before anytime it wants to move, it's always give you a confirmation. So which you now see that if I mark out this place here, price taking back inside of that same place, sitting down on the trend line, giving a confirmation, just like the way I saw it on gold. So they did the same thing here again before they start moving. And if you are not to judge this market very well, you now know that before they actually move, which I say sometimes is okay to wait for lower time frame structure change before you actually jump in the trade. So what they did here is they actually gave a break of structure here, or let me call it a change of character. Then they now pull back to this one, they continue with the buy. So that's just how markets move sometimes. And this is when market makers themselves want to make enough money. They actually know that everybody's in this zone, everybody's going to buy from this zone. So they're going to create a lot of manipulation around that area before they move. So hope you understand that.
All right, I have.
So any other question before we call it a day?
Can you go over to like your continuation, like how you get your how let's say it, your entries?
My entry is very simple, and I've already talked about it here too as well. My entry is 1, 3 things must align, and those 3 things is Fibonacci, the candlestick pattern, and the chart pattern. So these 3 things must align. Once the 3 of them align, then what I now start looking for is exactly to enter the trade. For example, when I talk about chart pattern, it's when I'm talking about market SMC, you can say market structure alignment. When we're talking about price action, you just say price chart pattern alignment. All right. So for example, just like I was explaining here, right? I consider this a consolidation. All right. And anytime you see consolidation, so I'm now explaining consolidation after this move, because this move here has told me that I want to go more higher, bullish, right? So, and price pullback for a decent pullback to continue with the trade, but instead we started consolidating. So after I say this consolidation, I've always understand something about consolidation. Is consolidation has 3 phases. That's what we call the AMD. They have the accumulation, manipulation, and the distribution. So A for accumulation, M for manipulation, D for distribution. So it's always happened around AMD. So what they did here is they first manipulated, consolidating for a while. Then when they consolidated, they manipulated the price to the downside, all right? Taking liquidity to the downside. And they now move in their intended direction. So the intended direction is bullish before they now move in the intended direction. They first manipulated the downside, then now move in their intended direction. So, and most of the time I look for entry when it comes to, like, for example, this AMD is, after I've seen this manipulation, I knew the next thing for a fact is that last candle that price left before it move out. So that last candle is left before that bullish move happened. Price will always come back to it, or that last zone. For example, in this scenario here, this was the last zone that price left. And what price came back inside